stability mandate, the bank decided to reduce the discount rate from 7.25% to 7.00%. In taking the decision to reduce the interest rates, the bank cautiously considered the credibility of the peg, the likely increase in administered prices, and geopolitical tensions, which can cause supply chain disruptions. The bank will continue to monitor international, regional, and domestic developments that influence the movements of inflation and will act appropriately in line with its mission to foster price and financial stability that is conducive to economic development in Eswatini.
Black Friday is slated for this coming Friday, but shops are already advertising deals, and it is not long before the frenzy hits consumers. Financial literacy advocate Terence Twala shares advice to consumers on how they should spend money this Black Friday week.
Black Friday is supposed to be enjoyed by those people who had saved for it, one. Two, you have to try to refrain from the fear of missing out on this Black Friday issue, and it's something that you can avoid provided if you can sell other things so that you can raise money to partake. But we are strongly encouraging those that have cash to go and spend on Black Friday and discourage people to go to take short-term loans so that they can partake, because you cannot take, I've seen some advert talking about a short-term Black Friday loan. Short-term is 12 months. So you take a loan now just to buy something for Black Friday, but you will be paying the very same loan for the coming 12 months. That is why I was saying people must start this year to budget for Black Friday next year. And those that started last year must enjoy buying this year. So there will be sales, yes, but it's not a sale if now you're going to pay this thing back with more interest than it was.
On another note, Twala has also shared advice for those who will be receiving their yearly savings from stock fails.
Definitely, it's Black Friday, it's Christmas. Before you know it, you don't have money. Why did you save in the first place? If you were saving for school fees, take the money, because you know exactly where your child will be going next year. Take your money, just pay it direct to the school account, so that whatsoever that is remaining, you buy uniform now when it is cheaper, because uniform is cheaper now, but in January it will go up. So if you do the school things now, because most people save because they want to pay school fees in January, but they then get tempted to spend those savings on Black Friday and on Christmas. So we are saying, just make yourself broke so that you cannot be tempted to use the money that you have saved and suffered for while saving, because you wanted to get rid of school fees.
The Washington Post says brands use advertising to convince consumers they are missing out on deals if they don't buy something, but the best way to take advantage of Black Friday is to use the markdowns to purchase something that one really needs. It says it is important that one crafts a list of what they need and plan to buy before they start shopping, and stick to that list. For Market View, Nelson Tlangamandla, Fuminkosi Nzinisa Mbabane.
And that's it for our business news. It's 9 minutes after 2. Thank you for staying with us. We'll go for an ad break. When we come back, Nelson has a discussion with the Citizens Economic Empowerment Council chairperson, Mr. Lincoln Mota.
Sabatandi ukuthi njengalokhu sivile sive sithi khulume.
Welcome back. You're still watching Market View. This is the Monday edition. Thank you for tuning in. We continue with our program. In 3 weeks, the Citizens Economic Empowerment Council will meet the consultant working on the regulations of the Citizens Economic Empowerment Act to deliberate on the way forward, as the Act is expected to start benefiting small-scale businesses soon. The Act is meant to, amongst other things, set aside some sectors for indigenous Eswatini. The chairperson of the council, Lincoln Morta, had a discussion with business journalist Nelsue Nlangamandla, where he gave details on what the council is doing to ensure that the Act starts to benefit small-scale businesses soon.
Thank you, Babe Mota, for joining us on Market View. Can you briefly tell us about the work of the Citizens Economic Empowerment Council?
Thank you so much, Margaret, for your time, for seeing me, and for this interview. I think first and foremost, I would want to appreciate the Minister of Commerce, together with the Minister himself and his team, for enacting the Economic Empowerment Act. Also the Parliament for passing this bill. I think this is one initiative the country has been long waiting for. So I think this will go a long way in assisting or helping SMEs in the country. The main aim of this act is to promote, stimulate small, medium enterprises growth through economic empowerment. So that will be done or achieved through preferential procurement. So most of the goods that are maybe, remember with us, Eswatini, we are used to tenders. So most of the tenders that are issued by government, there will be a certain goods and services that will be reserved for SMEs. Secondly, it will be in joint ventures. So the Act allows for the targeted Swazi to be in joint venture with foreign companies. Secondly, it will be around the issue of reserving some of the goods and services. We have learned in Botswana, we've been to Botswana for benchmarking exercises. We have learned that some of the industries are reserved for the citizens, i.e. your bakeries, your restaurants, your cell phone shops, all your car washes. Those are strictly reserved for citizens. I think as we are busy with enacting the regulations, we are looking at going that way.
What are some of the things that the council is working on to put the Act into motion?
Already, through the assistance of UNDP, we have appointed a consultant that is helping us as a council to put together the regulations, which will then be submitted to Parliament to be passed as a part of the Act. So I think in the next 3 weeks or so, we will be meeting with the consultant because they've already started. So we'll be doing it together. Whatever they are putting together, whatever they are crafting, then they will present to council to go through and also have our inputs.
Is there a specific time frame, Chairperson, which the council has set to put into motion the recommendations of the Act?
Yeah. This is giving us a sleepless night as the council, because we see the passion from the minister himself. He is pushing that by come the end of our term, especially the regulations will be in place. Some of the activities that are simple, we call them low-hanging fruits, should be achieved. We are pushing for a drive where we are going to be engaging with the Minister of Finance to make it a point that small SMEs are paid on time, because we have realized that they do suffer in terms of cash flow, as government and some of the private sector companies, they take time to pay them. So we will be facilitating a meeting where we will be sitting together with all these relevant stakeholders to say, guys, please, it's high time that we prioritize payment of SMEs. So by the end of our term, we are hoping that most of the small businesses will be, I want to say, probably millionaires.
The Act itself is a very, very good initiative from the Ministry of Commerce, Industry and Trade. But how can small and medium enterprises position themselves to benefit from this Act?
First and foremost, I think we have an Act. It's already passed by Parliament. I will urge them to buy this Act, read this Act, go through it so that they will know exactly what the Council stands for. We are available. We will be announcing shortly our offices where we will be operating from, our contact numbers, so that SMEs can be able to contact and engage with us time and again for more information.
Youth unemployment in the country remains a major challenge, and as a result, it's a very, very big concern. How will the Council work swiftly to address issues of youth unemployment?
The main objective of this Act is to empower SMEs. SMEs are a cornerstone or the backbone of an economy. I think we have learned over the period of time that currently worldwide, the issue of FDIs or foreign direct investment is dwindling. So now the onus is on SMEs to generate and create the much needed employment. Hence the reason why government decided to go this route, to say let us empower SMEs.
It's been a pleasure having you on the show, Chairperson, and we can't wait to see the small and medium enterprises in the country reaping the benefits of this Act.
All right, so that was Nelly having a conversation or a discussion with the chairperson of the Citizens Economic Empowerment Council, Mr. Lincoln Mota. Let's go for an ad break. Siyabuya khona manje.
A new era of AI has started, and it is impressive. With tools such as ChatGPT, Midjourney, or Google Bard, all I really need is to write a prompt, and there you have it. And the results can be pretty convincing. Let me try something. I love elephants, cooking shows, and koalas. And there. Wow. It must be an incredible feeling to be able to create such fantastic things in an instant, right?
I have no feelings about this or anything else. I am neither conscious nor self-aware.
Interesting. Then how are you so artistic?
I may not be conscious, but I am a very sophisticated system for recognizing patterns in a large amount of data. And now I'm also able to generate new patterns.
And that's why you're called generative AI.
Exactly. You got that right.
These AI tools aren't just unleashing creativity. They're already changing science, medicine, and entire industries in ways we don't fully understand yet. And this is only the beginning. But there are dangers too. Generative AI creations can be so convincing that they create a false sense of reality. That includes fake news stories, doctored images, and videos showing things that never really happened. Okay, enough of that. And generative AI is so good at emulating people that it can emulate our biases too. If the only data it has access to is text messages about how cute my cat is, that's all it knows. And every prompt will produce responses about how cute Snuggles is. He is though. Some say that AI could be the key to helping solve the world's biggest problems. Forecasting disaster, preventing famine, even identifying new medical treatments. Others see only the dangers. At the end of the day, generative AI is just a tool, but it's a tool that could change the way we live, the way we work, and the global economy. That raises big questions, especially for us here at the IMF, because it's our job to make sure that the global economy is stable, growing, and working for everyone. Generative AI is already making companies that use and sell AI services billions. That boost in productivity could add trillions in value to the global economy before long. Take customer service agents, for example. A recent study showed that giving them an AI assistant boosted their productivity by 14%. There's a flip side though. It could end up replacing some jobs entirely. But just like any new technology, AI could create new jobs by inspiring new industries and sectors that we haven't even imagined yet. It's all in how we manage it, with smart regulation and a healthy dose of caution. And that's why here at the IMF, we're doing the policy research to advise governments on how to create regulations that ensure AI is safe and beneficial for everyone.
Welcome back. Thank you for staying with us. It's 21 minutes after 2 at this moment. We connect with Sanele Sbiya for today's market analysis. Mr. Sbiya, very good afternoon and welcome to Market View. Perhaps if you can start with international markets in Europe. The European Central Bank has cut rates 3 times already this year, but investors now see a 50% chance it will cut by 50 basis points on December 12 instead of the usual 25, given weak growth and rising recession risk. Take us through international markets, starting with international markets this week.
Thank you, Lou. Good afternoon to the viewer. So if we start in the US, what we are seeing in the US is, that strong close on Friday, and we are still, if you are watching the futures market, the futures are still performing relatively higher, positing those all-time highs in terms of those growth numbers. We're seeing the Dow Jones Industrial Average above 44,000, which is yet another high that we saw, and the Nasdaq Composite Index is back on that 19,000 mark, with the S&P 500 just about to kiss that 6,000 mark in terms of volume. So that is actually attributable to the figures that we saw coming out of the US last week, the inflation figures, the very strong economic data showing that the US economy remains relatively stronger. And another thing that we saw last week, Lou, in the data that came out was that improvement in consumer sentiment within the US market. So that actually pushed up the indices because, with stronger consumer sentiments, that means the markets are moving to better marks. So we should expect that to hold. And, as Trump has announced his pick for Secretary of the Treasury, again, that's a pick that markets were a bit happy with. As someone who's conservative, but can actually be able to work within the Trump confines and, make sure that Trump is able to deliver his elections promises. So markets are just looking forward to that. And the US is also pricing in yet another interest rate cut in December, with, we're expecting another 25 basis point cut in the interest rate in the US in December. And then when we move across the pond to the UK, to the Eurozone, again, markets there are doing relatively well. We're seeing markets positing those positive signs of growth. Though they are barely just returning back to those levels at which they were sometime last week. So it's basically just that market regaining the losses that they made last week. So that comes on the background of strong economic data coming out of the US, signaling that overall the health of the global economy is not yet in shambles, right? But when you look into Germany, there's still issues remaining around investor confidence. Investor confidence fell to an all-time low in Germany, but because of that anticipated interest rate cut that you talked about, Lou, we are seeing that markets in Germany are also staying on the positive, but not gaining much. And then France again also just trying to edge up to that 2,300 mark. If you remember, in the start of the year, France was around 7,800 in terms of volumes. Just after those snap elections and that story within
the Eurozone within France, then we're seeing now, the Paris economy really struggling to get back to those very high levels of investor confidence. Another thing that we are seeing happening in the markets, which is quite of interesting, Louise, with that boost in consumer confidence, we're seeing the small caps, the retailers taking more ground and, moving upwards in the chain. And we're seeing that the market this time around is being led by those small caps. This comes after, remember with NVIDIA last week, we did speak of the forecasts coming below, the forecasts being downgraded in terms of the sales. So markets are taking that into consideration. And then also we saw issues around Google and, the lawsuits there. So we're seeing the growth right now in markets being driven by the consumer sentiment improvement and, that expectation of an interest rate cut, which will further work to propel those consumer confidence sentiments. And then moving into Asia, what we're seeing in Asia is just a juxtaposed picture. In Asia, when markets closed with Japan on a relative upbeat, purely because of those decisions that are being made by the Bank of Japan and also because of the data coming out of the US. But when we're looking into the mainland and also looking into Hong Kong, the numbers show that regardless of the fact that the Bank of China actually left their base rates unchanged last week, markets that didn't do much for markets, because what markets expected were bigger stimulus, were more stimulus injections, even though the Chinese government did pump in some money, some $80 billion into the economy in the previous month, but that the markets are viewed as inadequate to bolster the response in demand and also push that and also push up the Chinese GDP to that 5%. And still, we are not seeing much movement around the property sector in China. So that interest rate story within the mainland failed to impress markets. And then coming down into South Africa, what we're seeing in the Republic is, a bit of that loss in terms of the numbers within the JSE. But overall, one would say that's an improvement because the numbers are still higher than the numbers we were seeing last week. The decline, we can attribute it to the fact that because the economy, the real economy in the US is performing better. So we're seeing that shift from gold to equities yet again, and we'll soon get to those indicators. So that shift into profits has actually led to that downward surge as a result of the gold miners not doing very well. And so we're seeing that gold has actually tumbled a bit from the 2,700 mark that it actually touched when Russia when Russia actually downgraded their nuclear manual. So now it's relatively easier for Russia to launch a nuclear attack against any country as a deterrent to what we saw happening in the global economy, with Ukraine being allowed to use American-based and those English-based nuclear missiles to attack targets within Russia. And that's why we're seeing that gold is somehow has actually lost a bit, because the markets have now stabilized. And that economic data in the US supporting a cause for investment in equities rather than trying to hedge. So we're seeing gold losing a bit, but still remaining relatively high. And then when you look into the price of Brent crude, again, those tensions in the geopolitical front actually impacting the price of oil, but we're seeing it taking it down a bit today, but still at a higher level than we are used to seeing over the previous few days. And then when you look into the currencies, the currency has actually gained a bit of ground. It has actually we can see that the currency has actually lost a bit of ground against all these major currencies, but gained against the Japanese yen. So the losses there are purely due to those geopolitical tensions and that very much beautiful performance coming out of the US economy. So that is somehow, and the China story there is also coming into play, where we know that one of the major trading partners within of the region is the mainland China, and if the Chinese economy is not responding as well as it ought to be, then we're actually going to feel it in terms of the currencies. Thank you, Lou.
All right, thank you, Mr. Spier, for today's market analysis. This marks the end of our first episode of Market View this week. Thank you for tuning in. Do watch this episode again. If you've just tuned in, it's on our YouTube page, Eswatini TV. We'll see you tomorrow at exactly 2 p.m. Enjoy the rest of